But I'm very happy to catch up now with Bertrand Perez, the CEO of the Web3 Foundation, to talk about Web3 specifically and exactly what it means, because it's a big buzzword on the lips of many technology companies and people in the crypto industry. But how would you define it, and what problem is it trying to solve?
Yeah, so I think you're right. If you ask any people around here, you will have different definitions. And most of them will speak about Doji coins and ape pictures sold for fortunes. Our definition of Web3 is just an evolution of the internet towards an internet where data is not centralized, data is not controlled by single organizations who have control on your data. So Web3 is a way to distribute that data, so you have several copies of your data on the network. So your data cannot be censored. Your data, even if parts of the network are having technical glitches, your data is still available because there are backups and copies on other places over the internet. And your data is encrypted in a way that you own the decryption key, so only you can act on the data and you decide what you do with your data, whether you want to share part of that data with some applications or services, or you don't want. That's a guarantee that you have with Web3. And in addition to that decentralization, Web3 also adds a value component to the internet. So basically, you can, through the usage of tokens, you can pay for services in a seamless way through the integration of the various tokens that are available on the platform.
So just help us understand what that would look like in practice. Let's say, you know, what you're talking about, a lot of the companies these days, social media companies, for example, that own a lot of data on their users that are using that data. Let's say you take a social media company in the era of Web3. What does that actually look like in practice for users, and what are the foundational technologies there? It's blockchain, right?
Yeah, so from the user's perspective, the user will use the same user interfaces, the same apps on the phone. So there will not be any change from that perspective. The change will be on the background. So if you're talking about social media, in social media, there's a data component that is very core and key to the social media, which is called the social graph. Basically, that's the software architecture that describes all your interactions and the people you are connected with through the social network. And that's really the sensitive data that belongs to you. I know my friends, the message that I exchange with my friends, etc. That piece of information is right now centralized and kept within those organizations' data centers. In the Web3 version of social network, that data will be distributed across different systems, so no one has a single control on your data, and you will be the only one being able to unlock in your application the access to that data and lock it after using it, so that no one else can take value out of your social graph and your interactions. Only you are in control of that.
You mentioned value, and I want to move on to the role of tokens then in the world of Web3, because I mentioned to you, I spoke to your colleague Gavin Wood quite recently, and his view was that he's not sure that all of these sort of coins and digital currencies are necessary for Web3. Consumers won't want to switch in and out of different coins or tokens in order to use a service. What's your view on that?
Yeah, I think. Well, Gav is absolutely right. Right now, I think you have 19,000 different tokens out of there, which is for too much. And I think what we need to understand is, for each token, what is really the utility of the token? And I think this comes back to the classifications of tokens, and maybe we'll talk later about regulation. What kind of regulation should apply depending on the type of token you're using? And very quickly, you can see that we have stable coins, kind of tokens. So you want to use a token that is not, the value is not volatile, so you can use it for payment. You have what we call utility tokens. So those tokens have utility in securing the network. So like the Polkadot network that we are developing, the token is used in order to secure the data on the network. It's not used for specific payments. It's really dedicated to securing the network and making sure that every blockchain that interacts with the network is doing that in a secure way. And then, of course, there are other categories. I think we don't have time to cover all that, but there are other categories.
Yep.
And one of the effects of what we've seen last week with the Terra issue is we're at the stage where basically there are far too many blockchains out of there, too many tokens, and that's confusing users, and that's also bringing some risks for the users. Like at the beginning of the internet, you were having lots of .com companies, and lots of them were scams and were not bringing any value, and all that got cleared, and now we have very useful and legit companies. I think the good news, if there's one good news out of what happened last week, is that that kind of events are very painful for the people who suffer the losses of their money through those events, but it's also a way to clean who is there for the wrong reasons and who are the projects who really are there for the long term and try to provide utility through their blockchain and token. So back again, the tokens need to have a real utility, not just being there to pump in value and generate what we have seen last week.
Two questions. Firstly, what do you expect to happen then to all of these 19,000 sort of tokens in existence and the many, many blockchains that are running? That's the first question. And secondly, do you expect another incident like what we saw with Terra USD to happen?
So when it comes to the thousands of blockchains that are out of there, again, it's back to utility. If they don't have any other utility than just bringing a token and pumping the price, very quickly they're going to be washed out and removed from the space. So it's like in Web 2.0 or like in any industry. You cannot survive on the long term if you're not providing a real service to the consumers. Same applies to this industry. When it comes to other issues, for sure there could be others. Now, Terra was having a very big market cap, so the effect is bigger in terms of impact on number of users. Yeah, maybe there's going to be others, but that also brings, I think, two questions. The first one, when it comes to stablecoins, is that not all stablecoins are equal. So there's a need for people to educate themselves and understand that stablecoin A and stablecoin B are not the same in terms of security. When you have a stablecoin that is fully backed by a reserve of real assets, fiat assets and securities, short-term bonds, backing the stablecoin. And you have other stablecoins that are backed by other stuff, whether they are algorithmic stablecoins or others. The two cannot be put at the same level, especially when the value of the reserve is big, and you're talking about billions and billions of dollars. It's a different scale, and the risks are different. So that needs to be understood by the users, and at some point, regulation is going to come to that. And I think it's good that we have some level of regulation in order to make sure that only, again, the projects that make sense are able to thrive in the environment. So yes, I think there will be others. I hope they will not be of that scale, because again, a lot of people were hurted because of that. But yeah, time will tell.
Let's talk about stablecoins a bit more then, and the regulation that follows, because you mentioned stablecoins that are backed by real-world assets as well. But still, one of the criticisms of some of these other ones, when you look at Tether and USDC, is they're not transparent enough yet about what's in their reserves. The auditing, there are questions over the companies auditing them as well. So stablecoins, even that are claimed to be backed by reserve, still require greater transparency, right? Is that something that needs to come from the regulators? Or is that something these issueurs need to get out there?
Yeah, I think, well, coming from where I come, previously I was at Libra, so we launched a big project as a stablecoin. Yes, I think one is the quality of the reserve, and two, it's not only that you claim that you have solid assets, you need to prove it on a regular basis. So that way you generate trust. So your reserves need to be regularly audited by third parties who guarantee that what you have in the reserve is really what you claim you have. Yeah. That's important. So that's key. And I think, again, back to your example, some of the existing stablecoins are fully transparent. Some others are claiming that they are structured in a given way, but they are not providing enough transparency on that. Regulation will clear that. So I expect that once we have a clear regulation on stablecoins, the basic rules of the regulation would be that you have a clear reserve with a set of assets that are strong, that you are subject to regular audits of those reserves. So you can have an auditing company that comes regularly to make sure that you have the proper reserves, that you have also the proper processes and measures in order to face bank runs and other, let's say, negative market conditions to make sure that your reserve is really secure, not only when everything goes well, so when we're in a bull market and there's everything is green and great and everything is going to the top right direction, but especially when everything goes in the bear direction, that even in those situations, you're able to redeem to the users the money that they deserve when they have been purchasing your stablecoin. Yeah. So regulation will clear that. But yes, it's strong technology, very strong assets backing the reserve, full transparency, and regular audits of those reserves are key for the success of that type of crypto.
Bertrand, I want to, you've been in stable coins for some time as well, given your role in Libra. What were the issues at Libra specifically at the time? Why did it not take off? Was it the fact that Facebook was involved? Were the regulators just not mature enough at that point? What were the issues with Libra specifically?
Yeah, I think it's different things. The first one is that we took regulators unprepared, to say it nicely. So basically, the regulators were seeing cryptos until then, but for them there was no urgency, because for them at that stage we announced Libra in June 2019. Until then, for them, crypto was just a bunch of geeks using Bitcoin and speculating on a bunch of crypto assets, but there was no urgency to regulate from their perspective. When we did the announcement, they had the surprising moment saying, "Oh, this is potentially being serious now." So the European Union started the same afternoon a task force to push forward and be more active on the regulation. So it was early stage from their perspective. Then, of course, having such a name like Facebook, and also in the association, we were having 26 other organizations, Spotify, Uber, etc. So big players from the internet and other areas. So that put all together could potentially be a huge number of users. So that was also a concern. So no one is concerned of a stablecoin with a few thousand users, but when you're starting to talk about potentially billions, even if the overnight conversion from Facebook users to Libra users was not as quick as they thought. I mean, it's because users would have to go through strong KYC and so on. So there would be a lot of loss in the process. But from their perspective, that was, I would say, the main threat and the main area of concern. I think, yes, that was the main explanation. But from the technological perspective, everything was set up. And I'm sure that you heard about at least 2 projects that kind of spun out Libra that are now starting to ramp up and seems to be very promising in the future. So the technology by itself was very strong when it comes to the pure blockchain part or the reserve management. Back to my previous comments on reserve, we had lots of economists from MIT and other big institutions working and thinking about the model, the reserve backed against algorithmic stablecoin, etc. So we've been doing all those analysis, and at the end, only the reserve backed by real assets was the one that was the most secure and robust over time.
Bertrand, it's always interesting at Davos to hear from the world of traditional finance and traditional finance policymakers versus new fintech, blockchain, crypto companies. And I always try to get the pulse of what's going on with the regulators. You have a lot of conversations with regulators. And what we've seen is Christine Lagarde, the head of the ECB over the weekend, come out and say, well, she still thinks cryptocurrencies are worthless. We've heard some of the traditional finance folks who've come on CNBC say a lot of it's still junk. On the other hand, the head of the IMF just this week, she called Terra USD effectively a pyramid, but said, we should still look at the stable coins and how to move. So over the last sort of 2 to 3 years, have the regulators shifted mentality on the crypto in particular? Because they were always fond of blockchain, the underlying technology, but the crypto side, they weren't so keen on. So has there been a mind shift at all from the regulators that you're speaking to when it comes to crypto specifically, even given Christine Lagarde's comments over the weekend?
No, I think they have been evolving in the sense that they want to know more. So they want to get the information and make sure that they have the proper information before making decisions and setting up laws and regulations, etc. So that's good. The curiosity is there and the will to understand and see. They got the point that there's a huge potential innovation from Web3. And I'm not only speaking about the financial part, but Web3 brings a lot of other potential use cases. So they are aware of that. Now, and I would say situations like the Terra one last week doesn't help us, because that just generates a case for them to come with a stronger enforcement. So it's really not in our favor. So let's hope that this would be the last one at this scale, because it's clearly very negative. Their approach is trying to understand. Of course, that's why we are here. We want to help as much as we can, provide as much transparency, information, and education as possible, so that when they take a decision, they take it having the maximum of knowledge in their brains to do that. When it comes to the financial part, I think there are different use cases. Again, stablecoins are there and they will be there on the long run. So for sure, this needs regulation. And back to my previous comment, this is there to stay. So central banks are starting to talk about CBDCs and so on. So there's a future for that. Speculative assets is a different one, and also the DeFi part, where you have fully decentralized financial services. What is going to happen there? I would say I'm a bit pessimistic, because clearly there's very good innovation in that area that brings a lot of value to users. But again, back to the Terra situation last week, we now have a clear example that DeFi is not 100% good. You can also have bad stuff over there. So that part, honestly, I don't know how it's going to be regulated. I'm afraid that some tough decision would be taken on that part. But yeah, again,
still DeFi seems quite dangerous still for the users, given the hacks, the scams.
In the eyes of the regulator, yes. And I think as industry members, we need to keep that in mind, and we need to make sure that we are actively, when we are working for and developing DeFi services, we are keeping that in mind so that we avoid doing again the same mistakes, and we are not giving fuel for very strong regulation to come, because at the end of the day, it's in the benefit of that industry to provide real services. That, back to my previous comment, you need to provide real services with real value to the end users. If you're only providing real value to yourself, it's going to be a very short-term run that you will have.
Bertrand, we've got about 30 seconds left, so just a quick one on this. Given the market slump we have right now in the industry, what is your outlook for the rest of the year in terms of development on Web3?
Well, I think this, it's a bit of a paradox, but my vision is we're in a bear market, and I think that's good. It's good because it's going to clear the people who were there for the bad reasons. It's good also because all those projects are gone, so the legit ones will be able to focus only on developing, on building, and forget about the valuation of the token because everyone is down. So just focus on working and developing your application. So again, you're bringing real services and showing that Web3 has value. So building stuff, proposing services to the consumers. So those are the phases where real services are built. Right? It's not during the bear market, the bull markets, when everything is green. No one thinks about building. Everyone thinks about making fortune, which is the wrong mindset. So my perspective is from the building of new services, real services that bring value to the customers, and cleaning the market and the space from the bad actors. This is a good moment.
I'll be watching with keen interest on what's being built as well. Bertrand, thank you so much for your insights into this complicated and fast developing topic. I really appreciate it. A round of applause for Bertrand Perez of the Web3 Foundation.